Hey, good morning, everybody. It's Friday, April 3rd, 2026. I, of course, am Hammer, founder of Hammer Solutions, home for great products such as Originator Success, Grab and Go Social, and Rate Sensei. You can check those out anytime you like. They're out there to help my originator friends get more business in 2026. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time, broadcasting on Facebook and on YouTube. Glad to have you here. If you're here this morning, say good morning, Holly Johnson and Mallory Fotiato. It's good to see you here. Today, we're going to be talking about how wrong I was yesterday with my belief that markets were not going to like what Trump had to say on. Sorry, I'm getting vain here, fixing my hat. I think my head's crooked after surgery. There we go. Anyway, today we're going to fix my damage yesterday. I was very much in a locking stance yesterday. I really thought we were going to see an escalation, and that's the way that things started out in the morning, but we saw a reversal. So I'm going to go over what happened yesterday. Today we got jobs data to discuss. It came in stronger than expected. The initial reaction was pretty strong, but bonds are coming back, and they'll continue to come back as traders dig deeper into the data and realize that we really don't have a super strong labor market, as Ron Siegel has pointed out many, many times. Good morning, Albany Bush, Deb Dickinson, Michael Scott Love, Sean Segaloff. Good morning. Good to see you. And actually, yeah, pricing shouldn't be too far off, Scott. So it's not I'm sorry, Sean. So it shouldn't be too bad of a day. Remember, if you'd like a reminder text that I'm going live, I do send out a text alert as I hit the button. You can get that at hmmr.io/reminder or use this cool QR code over here. If you're on your phone right now, you can actually go ahead and take a screenshot, and you can use that code and go ahead and get access to our text that I'm going live. So let's just give it a minute and say hi to the live folks. We got 17 people on this morning. There'll be a few more coming in a moment. I know some people will be taking a bit of a day today. It's quiet trading day. Generally, we got a couple of articles that we'll cover as well. So, all right, well, that said, let's go ahead and get started. Let me share my screen. We're going to go ahead and start off looking at the technicals. And taking a look here this morning, you could see there is, that's 10-year treasury yield. Let's move this over to 5.5. There you go. Okay. So take a look at the technicals. Let's start off with what happened yesterday. So yesterday, I'm going to put this on, I'm going to zoom in so we can see this a little clearer and move this up higher. Let me see if you guys should be seeing, you should be seeing it pretty good. So taking a look here yesterday, let's put this on the 5-day for a minute. And there you go. You could see that yesterday there was a huge drop in the morning in overnight trading after Trump's 9 p.m. address to the nation, basically saying that we were going to continue attacks with Iran for another few weeks and that they were going to actually escalate. Before that, we've seen bonds really making some nice improvements. Remember, when this goes up, that puts a smile on your face because that's what's helped rate sheets to improve this week. And we've seen where rates really have been close to capping out. So if we take a look at what that looks like here at Mortgage News Daily, we've seen rate sheets that we were at 6.64 to end last week. It came in on Monday and on Tuesday and on Wednesday. And surprisingly, this one, the most surprising to me, on Thursday, where rates actually improved. So what happened yesterday, once again, we started off, when I did the video, we were right about here. In fact, where is 9 a.m.? Let's go ahead and we'll do a 2-day chart here. And you can see that, I did the video at 9:30, so that's right about here. And we were still seeing where's 9:30? So we were seeing a little bit of improvement here at that point, but not much. But what happened was what I didn't know is we were in the middle of seeing improvement all the way up to about 12 o'clock. And you could see here that we saw bonds improve, and they held those gains through the whole day. That's much higher than where we were when pricing came out. That led to a lot of reprices better yesterday. And, I did not think this would be the reaction that we would get. And in fact, looking at, CNBC, looking at oil prices this morning, taking a look here. Actually, no, we'll just go right to their main oil. So Brent crude right here at 109.03 this morning. But I'll tell you what I'm seeing here. And I'm going to put myself side by side, but I don't know how great you'll see me. Let me see. Let me just adjust this so I can get the page sizing right. Oh, this is going to be the wrong one anyway. Yeah, I'll just turn it off for a second. So anyway, here's the deal. Yesterday, someone asked me about locking for 45 days, and I apologize if I don't remember off the top of my head who it was. I was not feeling good yesterday. Anyway, the premise here was I was in a mode to lock everything yesterday because I figured after the Trump address that the escalation would push oil prices higher, which it did, and it pushed stocks down, which it did. But bonds have been actually benefiting again from the flight to safety. We've seen bonds decouple from that locked in pricing where they were really just tracing oil prices. Here's my current take on things. If oil stays below 120 a barrel, I think we might have seen the worst behind us. We could see rates creep back a little bit, but we should see the worst behind us. That's what I'm thinking right now. As long as we stay below 120 a barrel. If something happens, we get boots on the ground, things escalate, oil hits up to 120 a barrel and starts going higher than that, I think then that's going to rechange. That's going to change the rules, and we could see bonds really start to take a hit again. But in the meantime, I think we're actually in a pretty good spot for bonds right now. The 10-year Treasury yield, let me go back and show you some screens, right? And I'll take you guys through my thinking here. And again, I know this is 180 degrees from yesterday because you got to react to what's going on in the markets and not just what I thought. When we saw this reaction, when we saw this much improvement, the recovery, let me go ahead and put this on 5 days so you can see it this way. All right. We actually ended the day. Look at this. We were much higher than where we were on Wednesday, even though we saw this. I'll use it in red so that you can kind of identify it, right? This big dip that we had here in the morning, we were much higher on the day. Bonds are benefiting. You look at what we've seen happen here in the candlesticks. And let me make this a little smaller for you so we can, there we go. Okay. So look at the candlesticks. Look at where we were. This is last Friday. We saw improvement. This week, we've improved. Today, we have a red candle because of the jobs data. And I'll talk about that in a minute. But this will reverse as well. So I wouldn't get too worried about it. Looking at where we're at today, in fact, let's go ahead and get into that, though. So you can see this morning, we were continuing. We weren't too far off. And then at 8:30, bonds dropped off a cliff, but they recovered very quickly. They got about half that back, right? So right here, we see the reaction. That reaction is, of course, to the jobs data that came in stronger than expected. So jobs came in, 178,000 new jobs, topping forecasts. Nobody expects that we actually have strength in the labor market. This shows that before, remember, this data is for February, before we were involved with the situation with Iran, right? So this is February's data, and unemployment fell to 4.3% from 4.4%. So that was another big thing that came into it. So unemployment rate fell to 4.3%. However, that reflected a much lower, what we call participation rate, the number of people that are participating in the job market and say they're actually looking for a job. It slipped to 61.9%, the lowest since 2021. And this is part of the reason this would actually lead to higher unemployment. So arguably, if people said they were looking for jobs, then unemployment would not have fallen. A lot of the belief of why we've seen unemployment fall is because people basically left the workforce. All right, so that's why you're seeing this reaction. Now, when we get a negative reaction like this, last month we had a huge miss on jobs data. This month we have a huge gain on jobs data. It's swinging around like crazy. Traders are tending to not take this as data at face value anymore. And they're looking beyond the headlines. That's why you'll see the initial reaction and then you'll kind of see a recovery. Now, today is Good Friday, which means that we do have reduced trading. Markets close, bond market closes at 2 p.m. Eastern time. And I'll affect all the other stuff here. So anyway, I'll get to your comments in a minute, but we're only 10 minutes in. So sorry, I lost my train of thought here. I'm not even on payment, so I can't blame it on that. Anyway, looking at today, we'll have reduced trading volume. Markets are close early, and basically everybody is heading out for the week. So it's unlikely. Reprice risk on the day is low. We shouldn't have to worry too much about that. Things should be settled in. I'm taking back what I said yesterday. When you look at markets' reaction to escalation, it does not appear that we're getting the reaction that I was expecting that did start. I wasn't making it up, but the reaction is not there the way that it was. So let me go ahead and put the graphic at the bottom. Um, changing. I'm just typing this in, and then changing mind after yesterday's market, cautiously float unless risk averse. Now, I can't stress this enough. Boots on the ground, something could happen over the weekend. It's the same thing that we talked about last weekend, right? So it's Easter this weekend, so maybe we won't see anything. But if we do see something happen, if Trump takes advantage of the fact that it's on a weekend and he does go after, remember, he said he wasn't going to go after any of the energy facilities in Iran until April 6th. April 6th. Today's the 3rd, so that's Monday. So, but Trump is also, just like on that show Reacher, where he says, I'll give you the count of 3, and he punches the guy on the count of 1 or 2. He doesn't wait until 3. Trump may go back on what he said. He might say, well, I decided to attack early, and this was, our advantage, and this was my plan all along. Who knows? It's possible. So keep that in mind. We could see volatility on Monday if we see escalation. Randy asked, how much does active military action affect employment? Arguably not much. The increase in employment was healthcare and hospitality, I believe. So generally it's there. No, it's not. You don't have people that are counting as employed going into the military. We're not drafting, and people aren't actively joining it right now. So we wouldn't see any of that. So the answer would be none for right now. Seeing if there's any other comments. David Glenn didn't have a Reacher reference on my bingo card today. Yeah, but come on, did you see that show? I always like that show, the Alan Richardson. I've read all the book series, so and that's. But anyway, yeah. So again, yesterday I really was afraid that we would see escalation, and the escalation would bring bonds with, 10-year yield rising, bonds falling. We have not seen that. We've seen the opposite. Markets are reacting to where they're really not concerned about it right now. So because of that, it's a very different stance than I had yesterday. I would love to blame part of it on the fact that I hadn't slept and was out of it yesterday. But even still, we had the initial reaction after Trump's address that markets were, that we went from a ceasefire situation back to a escalation of military action situation, and that we'd see that reaction. But markets are not reacting that way. At least bonds aren't. Stocks are. Stocks took it heavy on the chin. But traders are all over the place. So because of that, we've really seen rate sheets improve a little bit. Today's jobs data, this will flush out by Monday. It won't be a big thing. Again, they'll pick through the report and see that a lot of this stuff is not there. Unemployment dropping is very surprising, but when the participation rate changed, that's a big part of that. Otherwise, unemployment would have been higher. And it's, we're not looking to where they round it. 4.3, it could be 4.38 something. I'll have to go dig up and find what the actual rounding was. So anyway, please let me know in the comments if this helps you, what you guys doing this weekend. I'll be, of course, taking it easy, still recovering from my knee replacement, and we're not running any marathons this week, so that's for sure. But feeling much better today. Got a full night's sleep, and life is good. So that's about it. Any questions? Anything you guys want to discuss? Anyone else? You guys interact with me a little bit. Anyone else surprised at the reaction that bonds are doing so well, rate sheets doing so well after Trump's address and the escalation? Did anyone else follow my logic? I haven't seen what Barry is saying lately. I haven't seen him in a long time. And I haven't really looked at Matt Graham stuff even. Sean, I looked in Rob's ass in National Chocolate Mousse Day. My wife said, woo, she's a chocolate mousse fan. So today is National Chocolate Mousse Day. How do you not love chocolate mousse? If you are, you're un-American. I said it. There you go. So Anyway, I'm still sitting in my lazy boy today. I haven't gone up to the barn office. Do that a little later and visit the cats. But for today, I am icing and chilling. So Vicky is surprised. Okay, good. It wasn't just me. I went to bed the previous night thinking we were going to see high rates in the morning. Yeah, I thought that things would take off. I mean, because we had seen so much improvement on the idea that we were close to a ceasefire. And again, I know all of the headlines are garbage, right? You know, you've got ones that say Trump is making up how well the talks are going. You've got one saying Iran is you know, saying that they're not involved in any of it. It's somewhere in the middle. You know, absolutely, there's stuff going on. And it's funny because you listen to it, and Iran makes it sound like they're not even affected by all of this military action. Hello, what are they supposed to do, right? But we've never put it out there of what the actual purpose is, other than the argument that they were close to nuclear weapons manufacturing, ability, and that we wanted to make sure that they couldn't do that. I don't know if we've done that or not, and I don't know that I would see that in the newspaper. So I'm okay with that. I hope that whatever action we take, we finish, and get the results that we look for. But I also know that Trump said he wasn't going to do a forever war, and he's looking to wrap things up. And we haven't put boots on the ground, and I think that that's important. That could mark a whole new shift if we see attacks. And also, we have to watch what's going on with these islands, Karg, and there's a couple of other ones. The other thing that helped yesterday that I didn't talk about was the Iran and is it Oman? Were coming up with a protocol for the Strait of Hormuz. So the MBS market is hungry to improve for some reason and isn't following standard logic. I agree, Charlie. And that's where I think we're seeing more of the familiar flight to safety is what we're seeing on that. Holly Johnson thought like me. Then I was pleasantly surprised that I got a decent rate. Yeah, it was much, and I thought we were getting in before things got ugly yesterday. I really did. I thought that things were going to continue to get worse, and that we were getting in early and being able to. That's why I was, in a stance to lock, because I figured we were getting in locking before things escalate. But again, there's a lot of potential volatility. We could lose things. Escalation could cause things to get worse. We just got to ride this one out. But it is a pleasant surprise that rates are better. So, all right, my friends. Well, you guys have a fantastic weekend. Thanks again for joining me as always. I'll see you on Monday. Take care, everybody. Bye-bye.